If you have been in a coma for the past week, here's a quick market update. We've seen an absolute meltdown of the entire market. Stocks, indices, metals, you name it. The likes we have never seen before. Maybe the last time we have seen this kind of volatility was during the COVID crash. But if we look at the S&P 500, what's this? Well, this, ladies and gentlemen, is the largest red candle on the weekly we have seen in the history of the S&P 500. A dump of this scale is unprecedented, not even during COVID. So this has a Black Swan event written all over it. So if you have been following me long enough, you know how much I want to long against this huge red candle. Because this is when we make real returns in trading. When we take impossible decisions like these, and they are impossible because very few retail traders are willing to act on them. And don't worry, we always have our risk in place protecting us. This is actually my second bite at this trade because the first one, I called it too soon. But that's alright. We lose 1 R to make 4 or 5 Rs. That's always the plan. I say this being the person who predicted this crash in the first place. If you watched my 2025 market prediction video, you will see that I predicted the event and the timing, but in my calculations, it was only a 6% decline. During the first 3 months of the year, the performance of the Dow Jones will be very weak. That's why our first trade idea of 2025 is going to be a sharp 6% decline from the tops throughout February. So my shorts were well closed long before this monster candle happened. The drop ended up being over 20%. During that time, I was actually waiting to time the market and find an entry to the second trade idea, the April long. Let me remind you what that trade was. Trade number 2 is one of the best trades of the year with up to 10% of gains for this trade alone. 10% means the price will be catapulted, so you could end up making 2 or even 3 5R trades from this trade alone. That's an entire prop challenge, by the way. And what does this one trade need? Nothing but patience, really. Straightforward, right? Well, in real life applications, it gets technical. And I want to share with you my technical analysis that went into taking the decision to long the market in unprecedented conditions. All of you guys are welcome to copy this trade and make profits with me. Nothing makes me happier really, but I have to warn you, this is the adults table now. So exercise caution as we proceed. Always remember to trade only money you can afford to lose. So today we'll talk about the monthly demand zone we are about to hit on all stocks. And I will show you our new valuation tool in action as I analyze this perfect level on top of level structure on the Nasdaq. We have got a lot to unpack. Let's get right into it. We'll start by taking a tour around the stock market, the powering engine behind the Dow, Nasdaq, and the S&P 500. Because let me tell you, it is crucial that we see stocks in monthly demand. Otherwise, timing this trade will be like catching a fish with our bare hands. So the question we want to ask is, do high cap stocks have space to go further down? Where is the next higher time frame demand? Okay, let's start with Apple. We can see that we are already in the middle of a weekly demand zone. But here's the problem. If we go up to the monthly time frame, what do we see here? This monthly demand zone is a little bit concerning because big moves just like the one we have just seen always come and go from higher time frame zone, like this monthly demand zone right here. So answering the question, does Apple have space to go further down? The answer is yes. And the higher time frame demand zone is right here. Let's move to Microsoft. And it's the same story. There's still space to the downside. And this could potentially be the demand area we are looking to long from. But would it be too crazy if it stops right here and reverse from this major flip level? We have discussed this before. Support and resistance flip levels are always something to look for during our analysis. And if this ended up being one, well, no harm done really. Our position will not get filled. What about Nvidia? It looks similar as well. The monthly demand zone is right below current price. And if you remember, we talked about freshness before. This zone may have seemed like it's violated at first glance, but that's actually on the wider version. What about the preferred version? no violations. And in the context of the bigger market move, I would say this zone is still fresh. Next, we have Google. And I was able to locate this demand zone on the weekly chart, and we can clearly see that's where price is heading. It's the only case where price is heading toward a weekly demand rather than a monthly demand like all the other stocks. Let's take a look at the more complex structures now, Amazon and Meta. And the charts do not look as clean on these two. We have intersecting level on top of level in each case, and from those intersections, we can refine our demand zones even further. But I have no reason to believe Amazon and Meta will be any different from all the other high caps that we looked at. Now, let's see how all of that affects the indices. This indicator you're seeing is the new OTC valuation tool, which now works in real time across all time frames on every single asset you can imagine. Not just the futures, but in our case today, we are looking at the Dow Jones futures, Nasdaq futures, and the S&P futures. Russell is not going to be part of our analysis for this trade. As always, the blue line indicates the valuation against the US Treasury bonds. The yellow line is the valuation against the gold, and the purple line is the valuation against the US dollar. So, across the board, we are undervalued. I like to look at the daily valuation, and as you can see, we are getting the strong buy signals on all indices. Does this mean we should place a long order at the current market price? No, of course not. We have to time this buy signals through supply and demand. Now, when we look at the weekly chart, we find that the valuation tool is giving us a unique reading, something that I rarely see. Can you take a pause and guess what it is? Well, let me tell you. For the first time since COVID, the weekly Dow Jones is now undervalued against all three, dollar, bond, and gold at the same time. The last time this happened, the COVID rebound happened. And look how massive that rally was. Almost 100% gains. So we are extremely undervalued at the moment from a weekly perspective. Again, does this mean we can immediately long the market? No, we still need to refine our entry. Okay, how can we do that? We need to conduct our top-down analysis. First, we pull up the monthly chart, and right here we have monthly demand zones in all three cases. All of this so far points at the same direction, that we are about to see a reversal on the indices as soon as the stocks hit their corresponding monthly demand levels. Now we need to refine it on the daily time frame, which is step 2. And before we do that, let me just tell you, I will do you a solid right now. I looked at all three indices from every angle I could possibly look from. This analysis is literally a 70-minute session on OTC, which all students had to endure. But I won't bore you with all of that. I will give you the gram of that entire session. I want you to close the Dow chart, the S&P 500 chart, and focus only on the Nasdaq for now. Why? Because the highest quality zone and the best probability of success are all on the Nasdaq. How did I know that? Because of these two reasons. Looking at the Nasdaq companies by weight, we'll find every stock that we looked at today, every stock that's heading for monthly demand is at the very top of that list. Apple makes up 8.8% of the entire Nasdaq weight. Microsoft another 8%. Nvidia 7%. Amazon 5.6%, Meta 3.5%, and Google 5%. Not to mention the many other smaller stocks that are also heading to monthly demand, pulling the Nasdaq in their direction. This way I know we are placing our trade in the direction of the largest institutional move. The second reason is a perfect high quality setup that I found on a daily chart. I like the fact that the Nasdaq obliterated the previous demand zone on the daily. So I'm inclined to think the origin here is much more powerful, aka monthly demand. And if you're remembering the big brother, small brother principle, big brother here being the monthly demand, we have to find the small brother now. In other words, we need to refine this zone on the daily time frame. So we head to the daily chart and voila, we get two levels on top of each other. And we have rules to trade the level on top of level scenario. We will go into these details when we discuss the zone qualifiers chapter in our supply and demand series. But here's what's important. We can already see the top level is violated. And the lower level is what I believe is the origin of the move. This big rally that you see all originated from this zone. It's also a fresh zone that just got touched for the first time. The only question now is whether this level is going to hold. I also need to highlight all of these massive CME gaps in our direction. I believe we're going to see most of these gaps getting filled in the coming weeks. By the way, I'm recording this video early Monday and it should be out on Wednesday, so please note that all of these candles are a day or 2 days old. But of course that doesn't affect the trade because it's a swing trade. As of now, this trade is still in play, and if you're watching this video a week or 2 or even a month from now, there will be many opportunities to long, because unlike market crashes, which are instant, the rebounds always come in stair steps. And if we mention rebounds, I have to make the weekly reminder that 2025 is the 5th decennial year in the 10-year cycle. 5th years are all about market rebounds, 300% worth of gains, on average from years low to years high. Can you imagine that? 300%? So the rally is surely coming, no questions asked. We only do our best to time it. Well, I did my best. I shared everything I know, and I want you to be part of this too. Now, it's your turn to make a move. Thanks to everyone helping us out with likes and comments. I wish that all of you will be able to catch a fish. And as always, I will see you in the next one.